Hello, Maverick traders. Welcome out to your market roundup, February 28th. We are coming to the end of February. Hard to believe we're already 2 months into the year. And let's take a look at the market. So it's been a bit of a bouncy week since we last met, market roundup a week ago. The S&P, the Dow, slightly lower today. Oil and gold higher. As far as price action is concerned, kind of disappointing price action from what I was anticipating. So I was fully on record last week. There was a big flush when we talked last week. I thought we would have a lower level the next day, and that would kind of set a bottom, and we'd get a short-term bounce, just a tradable rally. That has not materialized. So I certainly had the wrong outlook in the short term. We've basically gone sideways to maybe slightly lower, I guess in the S&P slightly lower, NASDAQ completely sideways. Advanced decline line about half and half today, and the 50-period moving average is about half and half, which kind of speaks to the market environment we're in, which is choppy and sideways. On the daily news, 10-year yield hit newest high levels since November. The bigger news is probably the inverted yield curve. The 2-year yield is almost 1 full percentage point above the 10-year, and that's abnormal. You'd think if you put your money in a bond for 10 years, you'd get more interest paid to you. No, a 2-year bond almost a full percent higher. Usually an inverted yield curve suggests that there is some sort of underlying weakness, that people are kind of hiding out and nervous, and it just speaks to a little bit of a dislocated market. On the home front, the housing data has been surprisingly strong. I'm not sure that can continue, but there was a rush of home buying in January. Home affordability is extremely bad, where you have higher rates and still high prices, but somehow the housing market hanging in there okay. So as we look at the S&P, as I said, last week we got a big flush down. I thought the next day would set the low and then we would trade up. Now, not a huge rally. I'm ultimately bearish like we talked about, but I thought there'd be a tradable bounce here. Pretty disappointing. The next day it tried to rally, then we went down, then back up. Today a little bit down, and we're a little under where that level was. What do we make of this? I think it does speak that we were exhausted, but basically it's just chop around that 50-day moving average, and certainly seems to be just kind of chewing people up and spitting them out. As it goes above, sucks in some buyers, then it goes below and stops out and gets people short, and then it goes above and it goes below. And we've now rotated above, below for the last week. That's ugly, that's choppy, that's going nowhere. NASDAQ, not at the 50, but same story. We had last week, last Tuesday we talked, it did set a lower low. It tried to bounce, didn't have it, went down, up, and now down again, just sideways, almost exactly flat from where we were. So I thought we would bounce. Now, last week I highlighted financials, which happens to be the one sector that went up, and that's where I focused my attention. I had on our bullish list last week, we had JP Morgan, Bank of America, Citigroup, Wells Fargo, I think Visa. We had all of them listed, and that's one sector that bounced. I didn't trade all of them, but I did trade Citi, JP Morgan, and Wells Fargo personally to the upside. And all three of those profitable a little bit, the keyword being little. Little bit of profit in the financial sector. So as we look at the heat map, you can see just kind of a mismatch day where there's some strength in Meta, formerly known as Facebook, Broadcom, a little bit more in the green, a lot of red, the healthcare space, the large cap pharmaceuticals more in the red, as you can see. Definitely healthcare in general was a little bit more in the red, but kind of a mixed picture, mixed bag, and that's what you'd expect out of a day where it's about half and half, 50% advancers, 50% decliners. It's, a little bit more strength in financials, a little bit more weakness over here in some of the other names, and utilities certainly almost all red. Now, as we look at the markets, what's the take here? My personal outlook is more that I was expecting a bounce, and I can't say that I have high conviction either way right now. Could we bounce first? Sure. Are we ultimately going lower? I think so. So it's just kind of, it's a choppy market. The moving averages speak to the fact that normally you don't just massively decline when you have gone up quite a bit. There is a tug of war here. So if it's going to be bearish, it should do so as a process of time, not just completely fall apart. And if it's going to go down, it should set a lower high, but usually kind of a bounce up and then kind of break and then a bounce up. And the selling should intensify more down here when it starts breaking to new lows. In here, it's not surprising that it's choppy. It is a little surprising to me that there wasn't any real bounce. It was just dead. So our bullish, neutral, and bearish list, we've had Tesla on the neutral list for the past couple of weeks. I'm going to remove that going forward because I think that's pretty much played out as expected and time to look for other neutral trades. But let's start with the bulls. Carnival, I think, is interesting. Look at the volume characteristics where you had higher volume on the way up, lighter volume on the way down, and today we kind of have a nice big size candle, long lower shadow, call it a hammer, call it a dragonfly doji. Either way, it's basically a bullish candlestick, and a long lower shadow like this with a bigger size candle on an increase in volume, I would absolutely expect some follow through to the upside. So Carnival to me looks like a bounce and a bullish trade in the very near term. Datadog. So this is a weird stock. It's a high flyer. It reported earnings back here, and you can see it kind of tumble down. But we're still hanging in there above the 50 MA. And it's not a high probability trade. It's a high reward trade. I think you can try to maybe bet on this if it reverses back up one more time. It's got the choppy going. It held at the 50 period MA. If we reverse up again, tomorrow, bullish green candle and such, I think you can play this back up towards that higher level. So the reward potential is a big move higher. The risk is it just doesn't have it. It breaks the 50 MA. I'm going to give it the benefit of the doubt here because I think it's consolidated and kind of chopped around enough. And then, like I said, even though the market's gone lower, JP Morgan's a good example where the financial sector is working its way higher. And out of all of those, JP Morgan looks like it's on the cusp of breaking out here. Now, I much preferred buying it on the dip than buying it on the breakout, but if you don't have a position, it still might have some potential. I would still anticipate this to go up and through that zone. It looks like a better group. It just looks like the right place to be. Tesla, we first started highlighting as a neutral trade right here. And the past couple of weeks have been perfect for a neutral trade. With a high beta, high volatility stock like this, to get that type of sideways movement is unexpected. I would certainly have called it neutral even if it was a lot wilder than that. So we've had the perfect neutral trade. Unfortunately, this is coming to an end here in the very near term. I don't know which way it breaks, but now we're at a point where the volatility and the volume have died down as anticipated. Now it makes sense to start to cover and close and take profits on neutral trades and move on to something else. On the bearish side, Caterpillar. So you can see the break here. Full disclosure, I have a bearish position on in, well, I guess I don't in Caterpillar, but I do in industrial stocks, but not this particular one. I may add this. Here you can see the bearish cross, 20 crossing below the 50, lower highs. This should set a little bit of a lower low. And again, the volume, you can just see higher volume on the way down, lighter volume on the bounces and such. That's a stock that's under distribution. They're selling. I would anticipate lower levels coming. GD, we highlighted on the bearish list last week, and so far so good. It's certainly breaking down. It's moved down a lot over the past week. If you're not in, watch for a little bounce, just a little chop for a day or two, and then play a new entry. If you're already short, maybe you add, maybe you get more bearish, maybe you double your position size on a small bounce, but ultimately I think GD is doing exactly what it should. I would keep anticipating lower levels are coming. And then last but not least, EWZ, which is the Brazil ETF. Brazil in the emerging markets is trading poorly. It's kind of consolidated and now broken out of that to the downside. And again, we look at price, we look at volume, we look at those characteristics. This is one that, because you're playing a Brazil market, there is more gap that happens, but I would expect that this is headed another 2 points or so lower down here towards these prior lows at about 25.80 would be the price target there. So EWZ looks like it should continue lower. As I said last week, I really had it wrong. I mean, call it what it is. I thought we'd bounce. We've played out the markets, that full big correction, and now it started to roll over. I thought we would get a short-term bounce, but still be in a bear market. We're not even getting the bounce, and that's not a good sign for bulls. If all it can do is consolidate, go sideways for a week or so, it's probably more likely to break again and then, not bounce and not give any type of lower high, but just kind of stall sideways and then another drop. ISM Manufacturing on Wednesday, we get Broadcom, Costco, Salesforce, Dell, Lowe's, Snowflake, VMware, quite a few companies reporting throughout the rest of this week. We highlighted Datadog. Snowflake and Datadog trade similarly. They're both high-flying tech names with high growth prospects, but very bad metrics in terms of earnings, where they're not making any money right now. So they're susceptible to some big swings and a lot of volatility. I hope you enjoyed this market roundup. Have a great rest of your day, and we'll see you next time. Goodbye, everyone.